Hi, this is Ann with Finance on the Offense, and today I'm going to show you a bunch of different ways to quickly increase your credit score. All right, let's get started. Okay, so first I'm going to go over a bunch of ways to quickly increase your credit score, because that's what you're here for, and then we'll go over the factors that decide your credit score. First up is pay your credit card bill on time. Did you know that a bad payment history, including paying your credit card bill late, is the one thing that can hurt your credit score the most? Late payments stay on your credit report for 7 years, so you need to pay on time, even if it's just the minimum payment that's due. Most credit card companies have alerts that you can put on your phone that let you know when a payment is close to its due date or past due. Now, if you do forget and you have one go past due, that's totally okay. I personally have forgotten to pay my credit card bill a couple times over the years, and it ends up going late. The moment I remember or find out about it from another bill, I do two things. First, I pay the bill immediately, and second, I call the credit card company, let them know what's going on, and ask if I can have the fee waived. I also ask them if it's been reported yet to the credit card bureaus, and every time this has happened, they said no. Now, this might not be the case if you don't catch it in time, but I personally have never had that happen. Number 2, pay more than your minimum payment or pay it off completely each month if you can. Another trick is to make micropayments. Basically pay multiple times each month because that helps your credit utilization. And that brings us to the next point, which is number 3. Keep your credit utilization percentage low. So what is your credit utilization? That's your total amount of debt across all the credit cards you have, divided by the total number of credit limits all added together. So let's say you have 3 cards and you have different amounts charged to each card. $1,000, $1,500, and $500. So $3,000 total. And let's say your credit card limits for each of these are $5,000, $8,000, and $2,000, so $15,000. $3,000 divided by $15,000 is 0.2 or 20%. So your credit utilization is 20%. Another thing to be aware of is that your score is calculated also based on the individual credit cards. So if you have one card with a high utilization limit, let's say you charge $500 and your limit is $1,000, that would be 50%. That's going to hurt your credit score. You need to keep your utilization under 30% or even lower to increase your credit score. One easy way to do this is to call all your credit cards and see if you can get a higher limit on each card. That way the debt on the card can stay the same, but your percentage will be lower. But definitely don't do this if you have problems with overspending. Number 4, see if someone you know who has great credit will add you as an authorized user on their credit card. When I was just finishing high school, my parents, who had better than 800 on their credit scores, decided to add me as an authorized user on their card specifically for this reason. Of course, they had a conversation with me about it beforehand. Basically, the credit card was for emergencies only. I wouldn't even have my own card, and if I ever did need to use their card, I would ask them first and get permission. I was a pretty responsible kid, and I actually never ended up using their card or needing it, but it helped me establish good credit at a very young age. Now, I will say there are only a couple people in my life that I would add to my credit cards as an authorized user. Because basically, if you do it, you're allowing someone else to use your credit cards, and you have to trust that they're not going to do anything stupid with them. Number 5, check your credit report for errors. If you see something on the report that's a mistake, dispute it with your credit bureau. The creditor will have to respond within 30 days, and if they don't, it's automatically removed. Number 6, don't apply for new loans or open new credit cards. Doing both of these things require a hard inquiry on your credit score, and hard inquiries will actually lower your credit score. Number 7, don't close your old credit cards even if you don't use them anymore. Part of your credit score is based on how long your accounts have been open, so closing them will actually work against you. Here's how your credit score is essentially built. So we've got the biggest section. 35% of your score comes from your payment history. So from their perspective, this is, do you pay back your loans? Do you do it on time? 30% is the amount you owe, and this is your credit utilization. So your debt divided by your credit limit. 15% is the length of your credit history, and that's why it's important not to close those old cards. 10% is credit mix. So this is just different kinds of credit cards, home loan, car loan, that kind of thing. And that one's not going to be very easy to improve quickly. And then 10% is new credit, as in try not to get new credit. Don't go applying for a bunch of loans. Just keep in mind, you don't ever have to pay any fees to credit card companies in order to get a good credit score. If you pay off your entire balance every month, it's basically just like getting a free loan, and you build your credit at the same time. Plus, if you have a card that has rewards, you can actually make money with your credit card. Alright, I hope this video has been helpful for you. If you like this video and you want to see more videos like it, just hit the subscribe button and the little bell next to it, and you'll be notified every time a new video comes out. Alright, I'll see you in the next video. Thank you!